I think the most likely end of 2025 Bitcoin price is going to be about 50% higher than it is now. Hey everybody. Many people think they've missed the Bitcoin opportunity. They've missed the bandwagon. I'm going to give you 4 reasons why you haven't. First of all is market sentiment. There's something called the greed fear index, 0 being everyone's absolutely terrified, and 100 everyone's being super greedy, FOMO, so on and so forth. Generally, scores above an 80 often indicates things are overvalued. Right now, things are right in that sweet spot, right in the mid-60s. Inflation is a huge driver, and just the $40 trillion in debt that I'm creeping towards has everyone worried about, what's going to happen to the dollar. So that's really driving market sentiment. Trump administration, being super positive and supportive of Bitcoin and cryptocurrency more broadly is also helping that quite a bit. Overwhelmingly, market sentiment is super positive. Second one is there are network fundamentals. And what I mean by that is the node network where people validate transactions. They call it mining, but ultimately what you're really doing is you're brute force validating transactions using compute power. And basically the way that's measured, they call it an increase in the hash rate, but the way to think about it is that the amount of computing power that's being used to validate transactions is continuing to climb, and it's at an all-time high. What that means is that miners, the ones that actually are paid in Bitcoin when they validate transactions on the nodes on the network, even though the halving just occurred about a year ago, so the reward was cut in half. That happens every 4 years. The investment that miners are making is increasing enormously. I was just at the Bitcoin 2025 conference. I think a third of all of the exhibitors that were there were all around mining equipment and things related to mining infrastructure. So miners are definitely in the know. They're making these huge capital investments. Those continue to climb. The hash rate continues to climb. So the networking infrastructure, investment continues to increase. The other one that's related to this is the Lightning Network. So one of the challenges with Bitcoin is the speed of transactions. So if you wanted to do the level of transaction volume that, say, the credit card networks use, the Bitcoin network couldn't support that. But there's a layer on top of that called the Lightning Network. When the adoption level there continues to increase, and the Lightning Network is going to facilitate the ability for much, much higher levels of transaction volumes, ultimately exceeding what I think you're able to do with credit card transactions. And when you want to start getting into things like remittances across, international borders, having something like the Lightning Network is going to facilitate that. All that, huge tailwind on both the market sentiment side and the network infrastructure. The third one is institutional adoption. So total institutional adoption is over 70 billion with a B dollars. GameStop, if you remember all the gyrations there around, people trying to punish the short sellers and, the hedge funds and private equity funds that were trying to game the system. And they definitely got a spanking. GameStop actually has 500 million now on their balance sheet. They've decided to become, at least in part, a Bitcoin treasury company. And there are a bunch of Bitcoin treasury companies that have popped up. So the most well-known one is MicroStrategies. They've rebranded themselves as Strategy. That's Michael Saylor's brainchild. They lead the charge by orders of magnitude. About 60 of the 70 billion is on MicroStrategies' balance sheet. But Metaplanet, that's a new Japanese Bitcoin treasury company that's trying to emulate some of the things that MicroStrategies is doing. They have 2 billion on their balance sheet. And the spot ETFs, which is basically effectively ways for people through, a more traditional finance channel, ETFs, to be able to have exposure to Bitcoin without actually owning Bitcoin directly. $122 billion. Most of that through BlackRock's ETF is now, so 122 billion now on spot ETFs. I think about half of that, is BlackRock roughly. So that's third one. Market sentiment, network infrastructure, institutional adoption. And the fourth one is growing utility. So more and more things are now going to be able to be done with Bitcoin. And I'll just give you one really clear-cut example that I think indicates which way things are going. American Express just is releasing a new credit card where I think you get either 3 or 4% Bitcoin cash back, if you will, for all transactions related to this credit card. So you have companies like American Express throwing their hat in the ring. You know which way the wind is blowing. And who knows? At some point, maybe people are going to be able to start being able to buy things on Amazon with Bitcoin. And once that happens, game over. So market sentiment, network fundamentals, institutional adoption, and growing utility. And then I'm going to throw in a bonus one, which is just as an economic hedge. There are so many people that I know that 18 months ago wouldn't even consider putting money into Bitcoin. Many conversations of the last 2 or 3 years with people that are wealth managers, even my own, when I tell them about how much of my money I have in Bitcoin, their head explodes. They're like, I could never, recommend that to my clients. Now you see RIAs now absolutely recommending that some amount of people's portfolios be put into Bitcoin or other cryptocurrencies, Bitcoin primarily, as an economic hedge. Again, when you're creeping up towards $40 trillion in debt and the printing machine, it seems to never stop, to not have, or, for anyone that has any kind of liquid net worth, to not be putting something like 5 to 10% of their liquid net worth into Bitcoin, you kind of almost have to have your head examined. Extra bonus points there of the economic hedge. Honestly, the sky's the limit. I think the rough estimates, again, not financial advice, but I will tell you that I think the most likely end of 2025 Bitcoin price is going to be about 50% higher than it is now, at about 150K per coin. We're just creeping a little bit over 100, 105K currently. I think the conservative estimates for 5 years, so end of 2030, 500K. So you're thinking about, where could you put your money for 5 years conservatively to get a 5x and where it current sits? There's not a whole lot of things like that. That's also an economic hedge. Also has those 4 other indicators, kind of showing why this is someplace you should put your money. Anyway, so not financial advice, but this is the way I see the world. Hope it was helpful.